I did not take a single trade today, and in this video, I'm going to go over the few reasons why not. First off, I recently learned this mindset that not only changed the way I trade, but also view the market. My job as a trader is not to create opportunities with the market. My job is to allow the market to give me quality trade setups, to which I then grade with my execution system to determine how high of a probability it has of going in my desired direction. This will eliminate the unnecessary risks that low quality trade setups have. And I always remind myself of this. I do not have the ability to end each day with a monetary win. However, I do have the choice to end each day with a psychological win. Now, I'm going to go over my current definition of a quality trade setup. A quality trade setup could be graded with either B, A, or A+. A B trade means that there is two confluences, however the market is going in the opposite direction than what I trade. An A trade means that there is two confluences, however the market is going in the direction in which I trade. And then finally, an A+ trade means that there is three confluences, as well as the market going in the same direction in which I trade. Alright, now going into the trading session, you could see that I marked out three directions I saw the market going in, as well as X marks indicating where I would not be trading if market was at that price level. I also put down two horizontal lines representing the consolidation that the market had. This environment is something I'm not really interested with trading in. Extremely volatile, very, very hard to gauge who is in control here. I don't see many quality trade setups with this environment. Over here is when I noticed that the March contract had actually expired. So I had to move over my supply and demand zones over to the new June contract, making sure that I keep that price gap in mind and making the adjustments accordingly. And the reason I move over these supply and demand zones into what seems like a different market scene is because it is very probable that traders may hold these as psychological levels, which is another form of market structure. Right here is when market reached the high of that demand zone, and you could see a large passive seller sitting there as well. I was unable to gauge how strong this seller was until market liquidated it and started moving downward. Considering that it was just in a demand zone, this just goes to show how strong this seller really was. You're also going to see market reach this level again and breeze right past it. I love these interactions because they have a story to tell. First, a large passive seller sits at a level, then market liquidates it and moves downward a little bit. But then it returns to a level that is now empty, goes right past it, and then is halted by more large passive sellers, bringing the market back down to the demand zone. Another reason why I don't like trading in this environment. Extremely volatile. You just don't know what to expect sometimes. Who's in control? Yeah. And sure, maybe I could have placed a trade here because there is some sort of structure. However, would it be a B, an A plus trade? No. Even if I won money from a trade in this market, I would not be proud of myself because I'm going against my rules. Speaking of my rules, here is the new addition to the trade execution requirement. Only take high quality trades, B tier or higher. Definitely something that I'm going to follow because this will eliminate the unnecessary risks that low quality trades hold. And lastly, this is the final note I took of the day, which reads, I did not take any trades today. The market did not meet any of my trading requirements. Sure, I could have placed a long where I noticed a lot of buyers, but that isn't a high enough quality setup that meets my standards. I definitely count today as a win. Maybe not monetary, but definitely psychologically. What a nice way to end the day off. Let's see how tomorrow goes.